You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
All right, everybody. That music means we are back once again. It's time for your monthly dose of advisor's goodness. It is time for the Advisor's Option. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you have been mainlining these days. Keep it up. We'd love to see all of you out there. We love the bandwidth bills. It's all fun. Of course, if you're on demand, all we ask is that you just rate and review wherever you get this show. There are so many new people discovering the world of options and volatility and everything else we talk about on this show all the time, that the most recent reviews, you can argue, are the more important than ever out there these days. So wherever you're getting it on demand, all we ask that you rate and review. And of course, if you want to go above and beyond, get not just all the nearly dozen shows we do on the network, but of course, our great pro Q&A sessions. Got a great one coming up a little bit later today with Mr. Saad Hussein over there from Shift Search, doing a lot of cool unusual activity analytics over there. So that'll be fun, as well as, of course, options oddities coming up every Friday, the giveaways, everything else. Theoptionsinsider.com/pro also allows you to join us live for this show, for everything else we do throughout the week out there. So check it out. A lot of good stuff there. And speaking of good stuff, we have a lot of good stuff in store for you today. Let's see who's joining me on the old Advisor's Option program. First, we go out to the far shores of New Hampshire. They have a shoreline. Everyone forgets that. It's very small. But there is a shoreline there in New Hampshire. We are joined once again by Mr. Matt Amberson, a.k.a. the Oracle of New Hampshire, a.k.a. the founder over there at ORATS, a.k.a. Options Research and Technology Services. That's a lot of AKAs. Mr. Matt, welcome back to the program, sir.
Those AKAs are heavy. and all the pounding in the background. I'm building an office, so it's not the market pounding me. It's my construction crew.
It's all your garbage puts coming home to roost, sir.
I was down at the beach today. It's in the 40s here still, and there was someone swimming. So we have the smallest shoreline of any state that has a shoreline. So it's beautiful out here, however, and happy to be on and with our special guest. I can't wait for this to get going.
Yes, exciting. I'm looking forward to also seeing this brand new office/studio you're building over there in Oratz land. I can't wait to get the full tour of the new Oratz office HQ there in the shores of New Hampshire. But also, we have to dial, remember listeners, every once in a while we used to dial it all the way out into the Atlantic, far off the coast there of Florida, to a small subtropical island known as Puerto Rico. And we are doing that once again because we are joined by the director of risk himself. Yes, he's back. Mr. Chris Hausman, a.k.a. the managing director of risk over there at SWAN Global Investments. Mr. Chris, welcome back to the program, sir. It has been too long.
It has been too long, so it's good to hear your voices, and thanks for putting me in, Coach.
Yeah, my producers tell me we haven't talked to you since July of last year. That seems crazy to me. So we have a lot to catch up on. Let's get to it. It is time for the P&L statement.
What the heck happened in the options markets since our last episode? Let's find out with the P&L statement.
All right, everybody. Welcome to the P&L statement. We break down all the madness that has been unfolding in the world of options since our last show. Usually that's enough to fill many minutes on the program. But Mr. Chris, he hasn't joined us since mid last year. So obviously a lot has unfolded. We'll dial that machine a little bit further to the present. Let's just only talk this year, because this year already has enough insanity to fill many case studies and analysis for days out there. So Mr. Chris, catch us up. What has been lighting up your tape throughout this tumultuous year? Obviously, we come into the year, markets looking kind of headstrong, looking kind of frothy. And then we see some tumult there. We start seeing sell-offs there. Vol starting to creep up a little bit. Then, of course, Mr. Putin has his say back in February and throws everything off the rails, nukes everything else in the conversation once again. And then on top of that, we have the Fed getting in there. We have earnings season kicking off. So a lot to unpack. What has been lighting up your tape so far in this tumultuous year, sir?
Yeah, it certainly has been an interesting year. So I guess I'll, like I used to always do, is kind of give my own technical analysis overview of what the markets are currently doing and what they could be doing down the road here. So, if you guys remember, like a year ago, the trade to make was always buy the dip, right? Buy the 50-day moving average. And that was a pretty good trade. And that has kind of reversed, right? So which is called polarity. And now the trade really is to fade the rallies. And so the 100-day moving average has been acting as good resistance, which is right around 4,500. But for the most part, we've kind of been range bound. If you've noticed, the last couple of years, we went through these periods where, we didn't have it's been so long since we had a 5% pullback. Well, it's been so long since we had a 10% correction. You fast forward to this year, we've already had 4 declines greater than 5.5%, 2 of which were double digits. We're working on a good one right now. And then we had 3 rallies greater than 7%. So the market dynamics have completely changed from this suppressed volatility by the dip environment to where volatility is now firm. And then you're just racing back and forth in this range bound market with the trend overall being down. Lately on a daily, if you look at the SPX on a daily, we've kind of formed this loose triangle, which is it's a consolidation and also a continuation pattern, and it usually breaks to the downside. So we actually just broke that triangle on Friday around 43.5. And if you do a measuring objective, we're probably going to be going down to 4,000. So my prediction right now is that we will have a good test of the 4,000 area. I think if that breaks, then, there's been a lot of talk of, where does this Fed put exist if it's still out there? And I think consensus is around 3,700 to 4,000. So in other words, there's probably a good tradable bounce in that area back up to test what? To test where we just broke down at 43.5. And if we go any further, lower than that to the 3,500, 3,600 area in the SPX, you're probably you're going to start hearing more people talk about recession and all that. And I think the line in the sand for me, and I think for the Fed, is the 3,400 area, which is right above the high, or the high right before the COVID sell-off. So I do think if we start going into COVID sell-off territory, that's when you're going to see the pain. But for the most part, this is a bear market. We're stair-stepping down. I think volatility has actually been pretty controlled pretty controlled and tame given what's going on, because the speed of the downdraft isn't quite there. And I know we're chopping around, and I just mentioned these large swings back and forth, but at the end of the day, the destination is almost unchanged, if you will, right? We're still in this nice range, and volatility is taking that into consideration. So, if I switch it over to the VIX, where am I a buyer if it gets down there? Well, I'm a buyer at 18 to 20 on rallies in the stock market, seller mid 30s, high 30s. And I think you keep an eye on the 28 level as a pivot point.
You mentioned kind of testing 4,000 in the near future. It seems you're more of a technical guy than I am. Seems like lately we're having a lot of trouble breaking 4,200. Yesterday we bounced off it pretty hard. Then we ended the day pretty much in the green. Today, 4,220, a little bit shy of that. Right now, it seems like we got down there and tested that 4,200 level. Got down to looks like about 4,210 was the low in the S out there today. So it does seem like, at least in the near term, Mr. Chris, there is a little bit of support there at that 4,200 level. But if we break through that, maybe even later today, then yeah, you're right. Maybe look out below. Is that your takeaway as well?
Yeah, absolutely. There is definitely some support at 4,200. I mean, I think the larger range here that we've been dealing with is 4,200, 4,600. At a minimum, we're going to test the lows that we had at 4,115. So, again, if we get into the 4,000 handle, 40 half, 40, 80, that's 1% to 2% away from that target, and that would qualify.
You guys over there at SWAN, you have the long-term puts, which are, useful for protracted sell-offs in the market, but also you're managing a lot of that near-term portion of the portfolio as well. Have you guys made any additional steps, maybe widened out some of these things, maybe look at farther out of the money, made any changes to the premium harvesting schedule in this new year in light of all the new conditions we're seeing in the market?
Well, I think we've been a little bit more active in selling calls now. So, when we turned the calendar and what I was looking at and what I was seeing here, I was like, listen, I think we're going to be more of a range-bound market. I think volatility is going to be elevated. This buy the dip thing is over. We're going to start going into an interest rate hiking cycle, which is going to be followed by quantitative tightening. So things have changed. They have definitely changed, and you can see that in the trading. So this is the year to sell calls now, definitely on rallies. That's part of fading that rally. Selling calls over the last 5-10 years have been horrible, right? I mean, we've just been doing nothing but rally. It's been very difficult, especially, when they're undervalued. If you look at the SPX volatilities for upside calls, they're at best at theoretical. They just can't get any edge on there because everyone is always selling them. And so they're too cheap and they really haven't come to fruition. But I think now with heightened volatility and the way the market's trading right now, I definitely think that covered calls should be in people's arsenals. They should be looking to get, short vol and short delta after rallies by selling calls. And yeah, the puts have been stable. A little bit more challenging on that side, but still manageable because we're not having these, we were used to this bull market where we had these exogenous shocks. And so you had these huge VIX spikes followed by the VIX collapsing right away. And so that dynamic has completely changed. So it's more like we're not starting from a 12 VIX. Or remember 2017, where VIX is elevated. So you're not going to see these shocks. And especially, again, like if the market just kind of slowly stair steps down, is methodical about the sell-off and the correction or the bear market here, then I don't think you're going to see VIX, at these huge heightened levels. Now, if the speed of the market or the speed of the sell-off changes, that changes very quickly. But so far, it's been very structural here in 2022.
Mr. Matt, what are your thoughts on everything Chris was just laying down, and also your own thoughts? Obviously, coming into Showtime now, I mentioned we're threatening that 4,200 level in the S. Of course, we're back over a 30 handle in the VIX. So things are very tumultuous out there. What's catching your eye in addition to all that, Mr. Matt?
Yeah, the market does seem heavy. Are the indicators that I like to look at? Of course, they're pointing down and have been for a while, but they're getting to levels where it's starting to get a little bit more interesting. I think we'll have a pause here at 40, 420, and then might go down to 4,000. I think that seems reasonable as a stop. But there's still that plunge protection team there, and they there's still some dip buyers. I think it's probably kind of one of these channeling down, but we're at the lower part of the channel is the way it feels like to me. Earnings. We'll talk about it a little bit more later, but hasn't been as eventful, I don't think, as people would have thought. The buying Twitter, there's still some activity out there in merger land. It just doesn't seem like the panic that you would start to see in a bear market. So it's a tactical bear, is what it feels like to me. And Chris is right. The skew or the slope is getting more beneficial for call sellers. It's flattening out a little bit. The puts aren't as high of a vol as the calls have been. And then just looking at what I like to look at, retail, right? So what do I look at when I look at retail? I look at the way out of the money calls divided by the out of the money puts, and those have come down. So retail seems to be slowing down to me. So that IWM, the components, the 5 delta divided by the 75 delta, looks to be coming down. So those way out of the money calls in the bull run that we had are slowing down quite a bit. So those are the things I'm looking at, Mark.
Well, a lot to unpack there, including you mentioned earnings. Let's get to that next.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
All right, everybody, welcome to the Earnings Volatility Report. Again, a segment we added just to encapsulate all the madness going on in the world of earnings volatility, certainly since the onset of the pandemic. First off, it seemed like nothing could budge any name. It didn't matter what you announced, all the vol came off, and it was just a great vol annihilation. Last few cycles, we've seen that worm start to turn. We have seen some moments, I put out there, moments of outperformance. Certainly seeing that parts and moments again like that. This cycle, of course, Netflix is what springs to mind for everybody out there. Once again, the Widowmaker just annihilating a lot of names, taking a lot of other names that have streaming components like Disney and others down with it. Coming into Showtime now, we are back in it fully. Our last show, we were kind of in between cycles, if you will, listeners. But now we are fully in it yet again. This is one of the big weeks of the cycle. Just a few of the names that are popping off this week, listeners. Coca-Cola, Activision, Blizzard, Google, Microsoft, GM, GE, Chipotle, Facebook, Ford, Amazon, Apple, McDonald's, Robinhood, Exxon, Chevron. I mean, if there's a name you watch, if there's a sector you watch, there's got to be something this week. There's literally something for everyone this week. It's one of those really interesting weeks of the cycle right now. So, Mr. Matt, we're kind of really getting into it now. We're kind of just kicking off really the first couple of weeks here of the season. We're finally getting into we had the financials last week. Those are always interesting. They kind of set the tone in many ways for the season. But now we're getting into it. There's really a broad cross-section of names that really are representative of the economy popping off this week. So what has been lighting up your tape and what's lighting up the machines over there doing all the analysis at ORAT, sir?
You posted the earnings trades last week or yesterday, and we had more than we've seen in a few months. So there's a lot going on. Our machines are steaming hot right now. So there's a lot.
That's what that banging is going on in the background. You're adding a whole array of new servers just to run the earnings trades report.
Yeah, and even more today. And yesterday was a great day for the machine. We had the only bad one was GE. GE lost 1.5% on a calendar. Of course, now calendars, you're selling the front month and buying the back month, and you want to see the stock stay in a range. However, I've seen some ones really blow out, and then the volatility goes up so much that the volatility in the back months actually save it a little bit. But for the most part, what we've been seeing is very high volatility because of just what's going on in the market. And the straddle owners, we'll go to the earnings season report because that's now we're getting into the second week of business here in the earnings season. The first week and second week have been very bad for straddle owners. We have, and we've seen this before. COVID was very bad for it because it just raised the vol and there wasn't much going on around earnings. There was more macro stuff and not as much micro stuff. That's not good for these straddle owners. So one way to do a risk capped trade is to do a calendar. So that's what we've been putting, and that's what the machine has been putting out. And you could go see those on your blog, Option Insider. But we've what are there, like about 12 calls yesterday, and like I said, all of them were good except for GE. I actually posted about UPS. It was one of the ones that was really high, and I did a blog on it, and that was up 4% that trade. So that's really good. And this one, and today we even have more, including the Googles. It looks like the front month volatility is higher than we've seen in the past. One of the new reports that we have on our new dashboard is the ability to look at what the market implied for a move, and that of course is using the straddle, but then taking out what we expect the straddle to be worth after earnings is over. So we do this distribution, and then we value the straddle at the lower volatility when it comes down, and so we could isolate in a very good way what we think the move is going to be. So we're showing those back 12 quarters and then showing a darker dot where it actually lay. And so you could see, quite visually where it beat, where it didn't beat. And, it seems like firms tend to beat, if they beat in the past, they beat in the future, and vice versa. So you could look at that new report on the dashboard, and I think it's helpful to see where the risk is, and look at these earnings trade signals coming out. We post and follow everyone, and we show too also how they've done in each week of the earnings season. So a lot of good information out there. A lot of it's over at the Option Insider, the blog. And so, and you're tweeting about it. So go check it out.
There is a mountain, a literal mountain, a metric ton, listeners, of earnings data coming at you right now. That's why they're doing so much work over there. They got to add new machines because they're breaking the machines from so much data coming at you out there, listeners. By the way, if you haven't checked out the latest addition to the reports, of course, we have the earnings season, which encapsulates the entire season and compares it to previous season, breaks it down by week. We have the earnings move, which is, of course, what's being predicted for a lot of the big names coming out by the straddles, what they've done in the past. And that's a big one for this week, obviously, because a lot of big names are popping off this week. Earnings move results, which you can see how they compared to what was being priced in. But as Matt mentioned, there's this newest addition, this newest wrinkle to the reports, which is the earnings trades report. And that one has been lighting it up out there. I'm just looking at it right now. We have 4 new short straddles, a whole bunch of long calendars. And what cracks me up about this report, Matt? We've been doing this network now this January. It was 15 years, which is terrifying to say out loud. But in all that time, I can probably count on one hand, maybe 2 or 3 fingers, the number of times we've talked about short calendars, which is the inverse of the trade everyone's used to. Usually in a calendar, you go out, let's say 1 month, you buy that at the money option, and you sell the front month at the money option, and that's your calendar. People can wrap their heads around that, but doing the opposite, that short calendar, seems like it just blows people's minds. They can't wrap their heads around it at all. You're selling the longer term one, you're buying the near term one, you want movement. It's all kinds of crazy. You are tracking right now 76 short calendars, Mr. Matt. So sounds like your machines are going just completely hog wild over there, Mr. Matt. Must be fun.
Yeah, that's an odd one, and it does. It's not very margin efficient. So there's it's tough to get your head around. I don't usually trade those, but the long calendars are again looking pretty good. You can see all the results. You can see how we've been tracking it and everything. So those are a lot easier on the you could sleep easier when you have these long calendars on, because you know what you paid for it, and you're just hoping for the stock to come back to somewhere near that strike, and that's the best place, Mark.
Yeah, looking at these reports makes me wonder, maybe we should talk some more about the short calendars just to blow everyone's mind here on the network. Fun stuff. You want to see all that for yourselves, listeners. The Options Insider is the place to go. And then, of course, click on the Options News and Articles tab and get into the earnings reports. It's all there for you at your reading pleasure. We always tweet it out there as well. So a lot of fun stuff to talk about. Speaking of fun stuff to talk about, you guys had an interesting question, which prompted an interesting new edition of our Tricks of the Trade segment.
And now it's time for practical tips on how to implement options into your practice. It's time to learn the tricks of the trade.
All right, everybody. I like to have that. Get that drop here on the show often enough. But this one, it kind of falls outside of the realm of your traditional options 101. It's not really an option-centric question, even though it has elements to it. It's more, I guess, if you had to break it down, maybe a futures 101 or ETF. We'll get to that. It was inspired by this question from Francis T. Francis wants to know, hello, Options Insider and Advisors Option Team. Well, hello, Francis. He says, I've heard Matt's become a fan of BITO. Oh, yes, he's been listening. I've heard Matt's become a fan of BITO on the Advisors Option Program, and I've had a few clients make inquiries as well. But I've also heard about issues with the basis and roll yield with this product and others, including VXX. Can you please explain these issues and how they may impact clients that I put into BITO versus spot Bitcoin or Bitcoin futures? Yes, to a lot to unpack. Maybe we should start with the last portion of that first and just say, hey, don't stay the hell away from VXX right now. If you're even thinking about putting clients into that, first off, you should know VXX is a very short-term trading vehicle. So it's not kind of a set it and forget it, put it in your client's account to get some vol exposure, then you've done your duty. No. You got to really babysit that. And right now, things are going absolutely crazy in VXX. It's kind of disassociated itself from what it's normally supposed to be doing. We don't really have much insight into when or if it will return to normalcy. So I would definitely caution you against diving into VXX on behalf of your clients right now. But BITO, a bit of a different story. Mr. Matt, since you're invoked, maybe I'll give you your thoughts. You've said earlier on this show, I think we kind of lured you to the dark side on this program. We got you trading BITO. I think it was live on the show where you made your first trade. Seems like you've been kind of sucked down the rabbit hole of BITO. Is that still the case, sir?
Yeah, I'm loving BITO. The strategy just happens to have been working well. I have crypto in a wallet, and I want to trade some callers around it. And sure, it does have a little bit of margin, but not too bad. So I'm able to do something. And the SKEW, when we first started the SKEW, the vol was a lot higher, so that was great. And now it's mostly just puts for me because the calls have gone down and not as juicy. But BITO is it's nice because they have the options out there. It's a ETF. I could do it right on my my brokerage. So so I've been loving that. And we talked a little bit about the how does it compare with owning crypto? Now, obviously, there's a lot of benefits. And I don't own BITO, the underlying. Or sometimes I do just to hedge a little bit, but mostly I'm not in it to own BITO, so I'm not making that call. However, we did see that the roll down isn't nearly as bad as like VIX, for example. So that looked pretty good. And then I went back and just looked at how has BITO performed compared to the Bitcoin BTC, and actually since year to date, they're both down 17%, almost exactly. So, since inception, there's about a point and a half, 1% of difference. So it's not that huge of a difference. So it's actually kind of kept up pretty well with Bitcoin. Now I've not studied it that closely. Again, it's not my purpose on owning and trading BITO, but it actually looks, and do your due diligence out there. But for the short history that we have, it looks like it's reasonably holding up with Bitcoin, Mark.
Yeah, that was kind of my surprising takeaway as well. And we'll get into that in a little bit. But first, it's been so long since we've talked to the director of risk. We've had all these watershed events happen in the market, like the launch of the first Bitcoin ETF, and we haven't had a chance to pick his brain on it until now. I know in the past, Mr. Chris, you've been lukewarm on the whole crypto space for a variety of reasons. Obviously, there's counterparty risk and decentralized and a lot of issues that a lot of people who come from the world of options, can rightly take issue with. BITO trying to bridge that gap a little bit. Obviously, listeners, if you're not familiar, this is the ProShares Bitcoin ETF. It doesn't just go out and buy spot or physical Bitcoin. What it does, it goes out and buys the futures on CME. So a little bit of a different beast, and that makes an impact. We'll get into that in a second. But I'm curious for you, Chris. Like I said, it's been a while since we chatted with you. What are your overall thoughts on this BITO product and its attempt to bridge the world of crypto trading and traditional finance?
Well, I think it's a good thing. Like you said earlier, there have been a lot of issues with trying to get into the Bitcoin space, and everyone's experiencing that. But there's no doubt that Bitcoin is becoming more and more mainstream. There's definitely a lot more advisors asking for it or wanting to learn about it. So for me, it's almost like, hey, remember where options were 10 years ago, and people were just kind of learning, and shows like this were coming on, and all this education was starting to go online. I think Bitcoin is kind of going through that maturity process where it's like, wait a minute, teach me about these ETFs, teach me about roll, teach me about how can I use options now. I've been doing it on equities. Well, now I want to do it on Bitcoin, just exactly what Matt's doing with his portfolio. So I think it's a good thing. They definitely, I'm looking at the BITO options. They have 15 expiries. The volume looks okay. I mean, it's a new product, but I think it's going to become more mainstream. And once you see that, and I think we all know the writings on the wall. All the exchanges are going to list at some point options on all these products, and it's just going to become more and more mainstream, and everyone's gearing up for that. So I think it's a good thing. And it's definitely something that we need to keep an eye on, because who knows, we've graduated from, Markowitz theory and the 60-40 portfolio to now hedged equity is very now mainstream, and a lot of people have that in their portfolio to, okay, is Bitcoin, and then gold, right? Don't forget about gold. Everyone had to have some gold in there, but is Bitcoin going to be that other piece of the puzzle where, okay, in the future we have to have some Bitcoin in our portfolio, and how do we manage that risk?
That is the case indeed out here. So let's get back to the original question from Francis. He says he's heard about issues with the basis and roll yield, and how can that impact the product? And that's kind of what Matt was alluding to as well. As I mentioned, this is not something that goes out and just buys spot Bitcoin. If it did, it wouldn't really have a lot of those issues. Instead, it attempts to replicate that using the futures. And that's both a good and a bad thing. And there's no real free lunch when you're doing that. If you try to just pretty much buy the near-term front-month future in the options, which is, of course, what the BITO product is trying to do, the near-term future in the CME Bitcoin futures. That's what BITO is trying to do. You're going to track reasonably well with the underlying. The problem is, obviously, you have to roll those products because they expire. And now what you're doing is going out and buying a more expensive, longer-term contract, and you're selling a cheaper, nearer-dated one, and you're going to roll down the slope of that term structure. If any of that is confusing to you, listener, check out some of our earlier archive episodes or some of our shows like Volatility Views, or indeed This Week in Futures Options, to explain it in a little bit more detail. So what happens over time, a lot of products, and this happens anywhere you're trying to replicate and use a future really to replicate exposure to any particular underlying. Could be crude oil, could be volatility. He mentioned VXX before, so it could be the VIX futures. In this case, it happens to be Bitcoin. Most of these futures products have a shape that's called contango, which means the farther out you go in time, typically the more expensive those futures are going to be. So it's an upward sloping curve to the term structure. So you could just see if you're buying 1 or 2 months out and then selling at the front month, you're going to be rolling down that curve. It's going to cost you some money. Now, when this thing first launched in October, there was a lot of hand wringing. Oh my God, this roll yield, in this case, it's negative roll yields, what it's called. That's going to just kill this product. There was numbers coming out when it first launched anywhere. I think the cheapest I saw was about 13%, but upwards of 20% a year just going away into the ether from that roll yield. That seemed like it might be a bit of a killer to this product. As Matt mentioned, as time has gone on, we have seen that has not exactly been the case. He just looked at the numbers year to date. It is pretty much lining up. Again, if you go back to close to inception, my numbers I ran were for the end of March, so they have about a month outside of them. At that point, it was roughly like 1.5% to 2% difference, which again, for 6 months, for all the other issues inherent with some of these products and things people were worried about, is not bad at all. And I think some of the things people have discovered, and we pulled it up right before showtime just to check this as well, looking at the setup and the term structure for the futures, is that contango that exists in a lot of other commodities it's kind of gone away in Bitcoin. Looking at the front month future was at a 45.05. The May future was 45.60. So you're talking a 55-point premium for 1 month out. You go out 2 months, it's 46.75. So you're talking 170 points worth of premium there. It may sound like a lot, but that isn't a lot when you're talking about a 40,000 point underlying effectively there. So what we've seen is effectively that basis trade. People can come in, they could buy the actual spot on whatever underlying exchange they want, and then they could turn around and sell the futures because they're trading at a higher premium and capture that, what's called that basis trade. And they have been doing that. And effectively, unlike a lot of physical commodities that have storage costs and cost of carry, there really aren't any of those with Bitcoin. It's a digital asset. It costs minimal to nothing to really store. And so you don't really have all those inherent costs that should contribute to a healthy contango. This slope is nowhere near what people were really expecting out there. So that means the drag on this product has been nowhere near what people were expecting. Again, I was saying 13 to 20% of what people were anticipating at the outset. When we had the ProShares folks on about a month or so later on the network, they were already saying then those numbers are kind of wildly overstated and it's actually going to be a lot less than that. And what we're seeing now in practice is that is indeed the case. So initially when BITO first launched, I was telling people, be careful owning this underlying. This thing could have a lot of headwinds against it. You have to do things like writing covered calls. At the time, the covered calls and the calls in general had a hefty premium. So that seemed like a pretty good trade to do. These days, we've seen that contango, that drag is nowhere near what we thought it would be. So actually, my caveats and warnings against buying and holding BITO are much less now than they would have been 6 months ago when this thing launched. So yeah, who was it? Francis. Actually, this is an interesting product now for that type of use case because a lot of your clients probably have securities accounts. They don't want to or aren't able to dip their toes into the futures. So this is kind of an interesting way to go about that. The headwinds are much lower than you might otherwise assume out here. And also, as Matt mentioned and as Chris mentioned, there are options on this thing now, which has been another thing a lot of people were really excited about, is the fact they could finally trade options on Bitcoin in a securities account. We've seen Deribit. We talk about Deribit all the time on our Crypto Rundown show. They dominate somewhere around 95% of crypto derivatives flow goes up on their platform. Problem is, that's off limits to all U.S. users pretty much. So that's a huge issue. So people have wanted to trade options on this thing. Look at the thing. It went from 1,000 to 30,000 to 60,000 back down. How great would it have been to have options on a lot of that run, right? So people have wanted options on this for a long time. And that's what BITO delivers. In fact, the OCC got that, our friends on this show. They listed options on BITO the fastest I've ever seen. It was within 24 to 48 hours between the ETF going live and we actually had tradable options on that. I've never seen it that fast. Usually it used to be in the minimum of 2 weeks, listeners. It's gotten to within a week for a lot of these names now and 2 days, a day and a half for BITO. So they clearly saw that there was demand for these options and that has held up. The ADV is still about 60,000 contracts a day. So that is nothing to sneeze at. People are out there trading options. So if you don't want to hold the underlying, and Matt said that, and I could still, maybe if you are still concerned about that roll yield, there are a lot of things you could do. All the strategies we've talked about here in the past, when this product initially launched, it was fantastic for collars and covered calls. Anything that took advantage of selling that call wing was a great strategy. You could buy the puts fairly cheaply because the volatility skew was pretty weak in the puts and pretty extensive in the calls. That has mitigated somewhat as we've been trending downward for the last couple of months. The puts have come more in line with the calls. So you're not getting anywhere near the premium to do those trades that you used to. It's going to cost you more to do collars and things, but still very attractive. And also, if you're looking at it to sell puts to get into BITO, that could obviously be more attractive for you there. So a lot to unpack on BITO. I think our takeaway from this here, what was it, Francis, is that we had a lot of concerns at the outset with the launch of this product, but it seems like a lot of those concerns have been mitigated. It actually is doing a fairly decent job of tracking the underlying, doing what it's supposed to do. The headwinds have been much less than anticipated for a lot of reasons that are seemingly obvious in hindsight. There's really no storage or cost of carry to this product. So traditional things that drive up contango don't really apply here, which makes it kind of interesting. Looking at, again, the prospectus, just make sure you understand how these things work. They even explain to you in the prospectus, hey, there's concerns about the impact of rolling on this. So if something were to happen, that contango were to get much steeper again, then we would maybe tell you, hey, watch out for this thing because that's going to start getting impacted by the roll yield. Also, conversely, if things get really wild in the Bitcoin market, then we have a situation that's called backwardation, where that front future is priced above the longer term futures. That could actually make you money on this product because you're selling a more expensive contract and buying a cheaper one. So in those types of really turbulent markets, maybe BITO is an interesting one to watch. People have also asked us about the Grayscale Bitcoin Trust. That one, I know Bill, our friend, buddy, Mr. Bill on Crypto Rundown, he's been on the show a couple of times. He's an asset manager and advisor as well. He likes Grayscale just for the reason that he could utilize it in his customers' accounts. Grayscale trading somewhere around a 25% discount to spot Bitcoin right now. So that's obviously should be a bit of maybe a concern if you're going to go out there buying this thing. It seems like BITO is kind of eating its lunch for the reasons we just described. The Grayscale folks have been talking about converting it to a spot fund. No confirmation of that. Obviously, that would be a big deal if that happened. Then that 25% discount would go away. So maybe you want to buy it on that scoop. I don't know, but intriguing stuff out there. Mr. Matt, any final thoughts if you have them on BITO? And also if you want to add anything on perhaps the suitability or lack thereof for Grayscale, have at it, sir.
Yeah, Grayscale is down 21% year to date, whereas BITO and BTC, Bitcoin, are down 17. So it looks like that one's leaking a little bit more than BITO. And of course, the options make BITO, very appealing to me at least. But another thing that I think is real interesting is that the actual volatility or historical or statistical volatility is way down in Bitcoin, BITO, all that. It's when we started talking about it, implied and actual was around 80 to 100. Now, historical volatility is 46 last 20 days, and implied, I don't know, somewhere around low 70s. So that's something to think about now. With the lower volatility has actually been kind of interesting with all these products. I think it's starting to bring more money in, and potentially it's going to be lower vol going forward, Mark.
Yeah, everyone's got Bitcoin and crypto on the brain, as witnessed by the buzz.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzz.
All right, everyone. Welcome to the buzz. We have to kick off the segment the way we have been doing pretty much since the onset of the pandemic, which is kind of debating whether or not this party can continue. Obviously, the party being options volume. It has been a tsunami since the pandemic kicked off. Everyone trapped at home. Trading kind of became the national pastime. And everyone, especially options, and to a degree, crypto, has just been lighting up the tape. We saw the numbers recently for March. We're obviously close to getting the numbers for April. But March, the second busiest month in the history of the options business, up almost 4.5% from the previous March, which, as you'll recall, March of 2021, no slouch, meme madness going hot and heavy during that time. So to not just come in near that one, but to actually eclipse it, that's no mean feat. So this year, March, doing a lot of paper, total volume, almost 944 million contracts. So again, we're threatening once again that 1B, that 1 billion contracts per month. I wonder if we'll hit that even by this year. I mentioned earlier I was coming off the heels of my first ever in-person conference again, my first ever in-person panel since the onset of the pandemic. I went down to STAC last week, the Securities Traders Association of Chicago, and I ran their options panels, myself and the Flowmaster, a bunch of great guests there. And we kind of looked back on the year that was 2021, and one of the topics we talked about was our outlook for 2022, what we thought and whether we think 2022 can possibly meet or, dare I say it, exceed it, which is a long way around to getting to the Director of Risk. Mr. Director of Risk, we haven't talked to you in ages, sir. So I'm curious for you, your thoughts on the just absolute tsunami of paper we did last year, nearly 10 billion contracts on the options tape at OCC. And then what are your thoughts for 2022? You think we can meet and or exceed it, or you think maybe it's just too much, we can't get there again?
No, I think we're going to exceed. And the reason is because of the education. I know, over the last year and a half or since COVID, the meme stocks took over and people learned how to buy upside calls and the excitement and all that. And I think what happened is it got a lot of people interested in options that otherwise would not have been interested in options if there wasn't all this buzz and all this excitement behind it. But what's happening is, okay, some of that cohort, they were not successful, or they were just doing it because it was a fad or whatever. But then what you really do is you get another piece of the pie, or another cohort that is like, wait a minute, you know what? I learned how to trade calls. Now I want to learn how to trade puts. Now I want to go into hedging. Now I want to start doing more advanced type things and doing earnings plays and calendars like Matt has been mentioning. So that's kind of how your options education grows. So I don't think it's going to be slowing down anytime soon. I counted 43 SPX expirations available. So that's a long way from the 6 that I grew up with when I first got into this business. And you're also going to have other products like nanos, the micro contracts that the CBOE is listing. And I just think you're going to keep seeing that, whereas exchanges are going to continue to cater to what clients want. And I think, and we all know, right, volume leads to more volume. So the more people trading, the more trades get spun off of that. And so I don't see this slowing anytime soon. Even if we do go into a bear market, I just think there's a lot more education out there, and there's a lot more ways for people to learn and pivot their trading strategies. No trading strategy works all the time 100%. They go through phases where they do a little bit better, a little bit worse. So it's really important to, be able to shift, from different types of strategies and assess what kind of volatility environment you're in, what kind of technical environment you're in, and use all these great tools and back testing all this. So I don't think it's going to slow down anytime soon.
Mr. Matt, same question for you. We're eagerly awaiting the numbers for April. That'll give us even more insight into how this year is progressing. We're just a few days away from that. But you mentioned earlier in the show, you think retail volume is declining a little bit. So where do you think we stand in terms of, can the party continue?
So I've always said that the Fed printing causes more trading. Bull markets help more trading. If we get into a bear and tightening and retail going down, I think we could slow down. I don't want to spoil the party, but I've been bullish and bearish, and really you just had to be bullish. The amount of trading and options that have happened. Our signups just at ORATs have been strong, but we've had a lot of good new products. I could usually count how many people are viewing our website, but and that's growing. So I think there's a lot of interest, as Chris was talking about. People are starting to learn about it. You could see it in the questions that we're getting asked here, a lot more sophisticated. And so I think people are learning about options, and that's what we've said all along. If you understand options, if you could start by trading small in your account, then you could start to recommend it at your firm or to your clients, and that's how things grow. So it does look like it's growing. I think there is going to be some headwind, but if this market continues to be this volatile, that's really going to create a lot more trading. So there's positives and negatives out there, Mark.
Director of Risk just comes back. He's already getting some love from our live chat. We have Unlimited in our live chat saying, I agree with Chris about that education piece for options volume. A lot of the Wall Street Bets kids were just buying calls. If just half of them learn options, they will start trading spreads, which is twice the paper of just a call. So there you go, Mr. Chris. You're back for one episode, already getting some love from the chat, sir. What's it?
Well, love is always good.
Yes. It even warms your cold black stormtrooper heart, sir. But we were talking earlier about everyone's talking about crypto. That is indeed the case right now. Once we get outside of options volume, a lot of the buzz these days dominated by crypto. First off, ETFs.com coming out with a new survey done by NASDAQ. They asked financial advisors, would you use a spot Bitcoin or crypto ETF? And 72%, so nearly 3/4 of them said yes, they would allocate more cryptocurrency exposure if there was an ETF option. Again, there is the BITO one we just talked about, but as I said, that was using the futures. That doesn't go out and just buy up quote unquote spot Bitcoin in all these various venues and hold it for you listeners. So that's what people are really waiting for in the crypto space. They polled, it's like 500 advisors who are currently or are considering allocating client dollars to crypto. So these are advisors who admittedly already have one foot in the crypto world. So maybe take some of those numbers with a bit of a grain of salt. But still, that's a strong majority of the respondents saying they want and would invest in a spot Bitcoin or crypto ETF. 70% said they would use an index-based product for broad exposure to crypto, versus only about half, 52%, say they would use a potentially actively managed fund. So they don't want active management gumming up the works there. Overall, 38% of respondents believe an approval is likely in 2022 compared with 31% of respondents who find it unlikely, and the remaining 31% are unsure. So it sounds like they're kind of split almost evenly, a third each, for whether they'll get it this year or not. I don't know if I'm on board with getting one this year. That'd certainly be interesting. That would certainly change the game quite a bit. Half of the respondents said they're currently using Bitcoin futures ETFs. So again, that's BITO predominantly. And 86% who currently have crypto exposure in clients' portfolios expect to allocate more over the next 12 months. So again, client demand for crypto is growing. Advisors are responding. Speaking of advisors offering Bitcoin and crypto, this news just breaking right before showtime today, actually. Fidelity coming out, obviously no small firm there. Fidelity coming out and saying the 23,000 firms that use Fidelity Investments to administer their retirement plans will soon have the option to offer Bitcoin through their core 401k lineup, effectively making Fidelity the first major retirement plan provider to offer Bitcoin in your 401ks. So, man, how the landscape has changed even since our last show. Let's go around the horn. Let's start with you, Mr. Matt. What are your thoughts on the vast majority of these advisors saying they want and would use a spot Bitcoin ETF? Also, the fact that so many of them are already using, sounds like the BITO product. That's kind of interesting in and of itself. And then B, what do you think of the ramifications of Fidelity kind of opening the retirement kimono to crypto, sir? And
I think a lot of this has been driven by the clients. The clients want to get in. They want to be exposed to Bitcoin, have a little bit in there. I've said 5 to 10% for a long time. There's a lot of benefits, portability, other than just the investment. So there's a lot of good things to say about Bitcoin. There's a lot of bad things to say about it. I've told about my ambivalence on it, but I think a small allocation is good, and it's being driven by clients. Fidelity has been out ahead. I mean, it's kind of funny. I used Fidelity way back in the day and still have an account there, and they've been ahead of the game on a lot of things. So that definitely opened up my eyes when I saw it this morning, and I think that helped Bitcoin. It popped a little bit on that, but it's down a little bit now. So it's interesting. Clients, are driving it, and I think there's a lot to be said. And I think there's a decent future for it. I've talked about the drawbacks, but I think there are some good things, and we'll see with the options now in BITO and other types of ETFs. I think you'll see a lot more uptake out there, Mark.
Yeah, you're right. I thought that news this morning would certainly help to pop Bitcoin, and it did ever so slightly. But again, that broad beta for crypto, everyone used to say it was inversely or non-correlated. It is highly correlated right now and getting dragged down yet again by the sell-off in broad equities, in spite of this rather earth-shaking news. Mr. Chris, what are your thoughts on this big development out of Fidelity kind of shaking up the retirement game where many advisors play when it comes to crypto? And then also this study coming out of NASDAQ by way of ETF.com saying the vast majority of advisors are interested in crypto and would trade a spot Bitcoin ETF.
I think it's exactly what Matt said. I mean, clients are clamoring for it, so you've got to give them the tartar sauce, and so it will become more and more mainstream. It will be part of people's portfolios. I think the question that has to be answered is, can people handle the volatility? Are you going to be able to handle that type of volatility, especially in retirement accounts if it's allowed and all this kind of stuff? So, it's going to be new. I think a lot of people will start tiptoeing into the product. And if the volatility is too great, but they still see it as a viable product and a diversifier to their portfolio, then they may turn to some, hedging type techniques. And that's where options come back into the fold. Is like, okay, I have this part of my portfolio because it's proven as a diversifier to other products, but I still want to be able to hedge this. And then how do you hedge that? What kind of option techniques and strategies do you overlay on top of Bitcoin to hedge that out?
All right. We like to overlay a few questions on top of the show. So let's get to the office hours.
It's time to answer your pressing questions about options. It's time to start our office hours. You can become a part of this segment by leaving a question on theoptionsinsider.com, emailing us at questions@theoptionsinsider.com, or via social media at twitter.com/options. facebook.com/theoptionsinsider or stocktwits.com/optionsinsider.
All right, everybody. Welcome to the office hours where you folks take the reins, your questions, your comments. Let's see how many of you we could squeeze in the scant time remaining. Let's go out to Kevin T first. It says, hi. Oh, hello, Kevin. He says, can you help explain the difference between swimming delta and skew delta and why this would impact index/ETF options more so than single name options? Thanks, Kevin. Well, Mr. Matt, we're coming up against it, but this one's right up your alley, sir. What do you have to say for Kevin T? Wants to know the difference between swimming delta and skew delta, sir. Well,
right there, just like what we were talking about, how the education's really gotten to our listeners. This is a question that's pretty advanced, but it has to do with where is the volatility going to? What is the path of volatility that we're estimating if the stock moves? So you can envision, how the monthly skew looks like. Usually it's kind of either steep as in an index or kind of a smile and flat like a single stock. Now a skew delta is just if the delta is based on that skew. So and the question also had, why does it affect indexes more? The indexes have a lot steeper of a skew. So you could imagine if the stock goes up, the volatility is going to fall down quite a bit if you just follow that line. Now, a swimming delta or a floating delta, as some people call it, is basically what most people do. What I do is you just repredict where volatility is, where the at-the-money volatility is going to be, because I think it's more proper, let's say, to use a floating or swimming delta, because the skew delta is there for a reason. That's for a large move that really is usually unhedged. But a swimming delta, as the stock moves, you kind of say, okay, what is the delta going to be? It's probably not going to move up and down that skew line. That skew line is there for a different reason. But the pricing the at the money implied volatility should be done on its own and have its own calculation. It's kind of lazy to use, I think, the skew for the floating or the swimming delta. Hopefully that makes sense, but good question.
Yeah, you're right. This does speak to the growing sophistication of the audience. When we first launched this show, the notion that people will be asking about swimming and skew deltas, I probably would have said no way, but that's where we've evolved to in the markets right now. Advisors and their clients getting more savvy out there. Mr. Chris, anything you want to add here for Kevin on swimming delta versus skew delta and their impact on index and ETF options, sir?
Yeah, so this is really a question, kind of like Matt alluded to what's the shape of the skew or how does it move around? So you have sticky strike skew and you have floating skew, or also called swimming skew. So skew can be an input into an options pricing model. We're all familiar with the 6 basic inputs, but you can also model an option pricing model that also has an input for skew, okay? So anytime you change any input into an option pricing model, that's going to change your deltas, and that's probably why this question was phrased as swimming delta and skew delta, right? Okay, if I change skew, what's going to happen to my delta? So the sticky strike skew, and that's where volatility skew remains fixed. So the current skew determines the implied volatility no matter what happens in the marketplace. In other words, your at the money stays equal, right? It just shifts, but your at the money on a sticky strike stays the same. And I agree with Matt. It's not really good because we know volatility does change because of underlying movement and supply and demand, for option contracts. And moving to the floating skew, that's where skew now shifts, right? It can shift horizontally as the market moves up or down, and it can shift vertically, vertically, right, up and down, depending on whether implied volatility is moving up and down. So the swimming delta or floating skew is incorporates both underlying movement and movement of the skew, and that's really the one that you should be using, and not necessarily the sticky strike.
All right, great question, Kevin. We'll have to leave it there for this episode. We had a lot of living to do in this episode, talking about the crazy volatility from this year, impact on all sorts of fun things, earnings of course, all the crypto madness making its way into the advisor's realm these days, and topping it off with swimming versus skew delta. Great questions out there. But before we go, let's go back around the horn. We haven't been joined by the director of risk in quite some time, so let's get a quick catch up. What's he up to these days? What's he working on? What's coming down the pike from him and the folks at SWAN that may intrigue our audience, sir?
I haven't been here in a while, so it's not going to be quick. So anyway, SWAN recently turned 25 years old. As always, there's a slew of resources on our website, swanglobalinvestments.com, the latest being observations and insights useful for tackling the next 25 years. We've got on May 18th, ETFtrends.com is going to be hosting a webcast with our very own Mark Odo and Rob Swan, and they're going to be discussing irrational exuberance, risk management lessons from Schiller's classic. And we also, if you guys remember, we have our own hedged equity ETF product that tickers HEGD. You can get more information on that at etfs.swanglobalinvestments.com. And lastly, we will be attending the OIC conference in San Antonio. And I'm heading to Vegas, baby, for the EQD conference. So I hope to see you guys there.
Oh, you going to OIC? I'll definitely be there.
I'm not going to OIC. Someone else is, but I took the Vegas one.
Oh, you took.
I don't know why. I don't know why I chose that one. I'm from Texas. I've been to San Antonio plenty of times. But that's a great hotel and a great venue that they're having it at.
The Riverwalk and the Alamo have no more majesty for you, so that's what you're saying.
I know I love San Antonio, trust me. But again, I've been there so many times. When I get the chance to go to Vegas, I'm going to lean towards that one.
We'll miss you down there, though. I believe, Mr. Matt, you're going to OIC as well, are you not, sir?
I am. I was hoping that Chris would be there, but not to be.
That's it. Now he's canceling his tickets because of you, Chris. I hope you feel better about yourself out there. Mr. Matt, while you're dealing with your pain, sir, what's cooking in the land of Orex?
A ton. So we released our dashboard product. I can't even begin to say all the things it does. It's really, really cool. And now we're working on, positions and position management and risk. We have a value vol that shows the volatility. We have, where the open interest is, the dealer gamma. We have just a ton of stuff. Also, we didn't get to talk about my way out of the money VIX calls. They're working.
Yes,
working okay. And,
your garbage VIX. What was it? 120 strike. What were you at?
And the farther out ones are the ones that are working pretty well. So I'm happy about them. I got a lot of shade from people, but
you're the guy buying 20,000 of those June 120s. That's you.
Yeah, or 20. But anyway, we got to talk about that next month because they're doing okay. Anyway, so
maybe I can arrange a special appearance on Volatility Views to discuss those, sir.
Yeah, exactly. Earnings in the small VIX calls. I'm in.
All right, check it out if you haven't, listeners. Bang away at that dashboard. I played around with it a little bit. I got to do some more myself because there's a lot of cool stuff. You can find it all for yourselves. ORATS, ORATS.com is the place to go. Give them a follow on the old Twitters as well at Option Rats, aka Musk's platform now. So who knows what's going to happen with all that good stuff. And of course, where to go to check out all the stuff from our friends over there at OIC. Optionseducation.org is the place to go to learn more. We got to get out of here, listeners, but don't worry, all you Secret Club folks, just hang out there in the chat. We'll post some fun stuff in there for you. We'll be back a little less than an hour now with Mr. Saad Hussein from All Things Shift Search to break down the world of searching for unusual activity. We were talking about crypto today. He has Shift Crypto now as well, so we'll probably sneak a little bit of that in there as well. If you haven't gotten your questions in, start getting them in. They should be pretty fine. We've already received a bunch there, so that'll be coming up for all you cool kids in the Secret Club, exclusively for you folks. And then, of course, back again, Education Wednesday, all the other good stuff, then a whole new month and a whole new episode coming at you of The Advisor's Option. Stay safe out there, everybody.
Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit ORATS.com or email Matt Amberson at matt@orats.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.